What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We've got Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Microsoft, and Amazon. We only have one trading day left in the month of August, so we are going to look at some monthly charts here. Also, many of our companies are now trading in blue sky territories, so in order to add a little bit more value to the video, we are going to throw in 5 additional tickers here. These tickers were recommended by members of the Discord chat, which is a completely free service we offer. You can find that linked down below in the description of this video with our other free resources. And as always, if you find this video useful, feel free to share it with a friend. Let's hop in. Jumping right into the SPY monthly chart, I first want to point out the number of consecutive higher closes we've had on the monthly bars, and there's been 5 higher closes there, so very noteworthy, very bullish. Next thing to look at is the value and range and the location of this month's candle, and you'll notice that the range is completely broken away from a prior month. That's the first time this has happened ever since we've rallied off of these lows here. If you look at what I just circled, everything there has some overlapping value to the prior month. This is the first time it's completely broken away, which is an extremely bullish thing to note. Next thing to look at is down here at the bottom we have volume, and I just want to sort of highlight what's been considered normal in the past. So this section of the chart, it only looks like volume's tapering so heavily because the volume that was traded here, which correlates to this section of the chart, was so high, and we all know why, right? The next thing to sort of note down here as well in terms of volume is the fact that summer trading months, it's just going to be lighter in general. That's just sort of the way the market works. And lastly, I do want to acknowledge the fact that this is starting to look, keyword there being look, overextended to the upside. I'm sure many of the viewers watching this are recognizing that as well. Many market participants are starting to see this. And I want to be abundantly clear here that this is not a bearish call. I'm not trying to say that this is the top at all. The market can continue to go much higher, and sort of ignore all the rules of gravity, if you will. But I do want to just be sort of cautious here. If you're putting on any new long trades in the S&P, anything in tech, as we'll look at in the Qs in just a moment here, I want you to just realize what your trade location is, right? If you're putting on a trade up here, you could potentially be buying the top. If you wait for a pullback, and I'm not saying this is going to happen, but I would say, this would be a better entry for any sort of new longs, then you have a clear stop loss, right? Underneath that new pullback low, you can then look for that continuation higher with a stop loss down below where we pulled back into. So just be cautious putting on any new longs here in the S&P. It does start to look overextended, but again, I want to be abundantly clear. We're not trying to time a market top up here. We're not going to start shorting the market up here. I just want you to be cautious putting on any new longs. Flipping it over to the weekly chart, there's not really much to talk about. We've sort of covered it there on the monthly time frame. We obviously broke out over our all-time high this week with that continuation we were looking for. We got that big pop and that influence and excitement that we were looking for, so the continuation was higher. The daily time frame is going to provide a little bit more clarity for us in terms of levels to be trading off of. So of course we have the new all-time high up at 350.72. Anything lower than that, and I do want to point out the fact that we do have a fake gap fill down here. There's a wick where in reality there's a gap between 341 and 339.68 just about. So keep that in mind if you're using Thinkorswim. But underneath there's really not much market structure down below here. Right? We could point out a level that could be somewhere in here because we have a high forming on Wednesday. Thursday it held above, and Friday it bounced off of that area as support. Let's actually drop it down to the 30-minute and pick out some levels that we see intraday. So very good, in picking out that level there at 348 just about. It looks like it did act as key support as we held above it. It looks like there's another key resistance. This is sort of the most recent breakout area at 349.66. So just keep that level in mind on any sort of pullbacks. Look for a confirmation and retest as support, and then a move higher potentially. But anything underneath our 348.02 looks like our next support down below is going to be somewhere in here, around 346.40s just about. I'd split the difference between some of these lows, and then really after that, it's down, we go to the gap fill. You can tell that there's not very much market structure in this move that happened back there. So I hope this little dive into the intraday charts here was helpful in terms of pointing out some levels. Let's move on to the Qs. So the Qs monthly chart, again, it kind of goes without saying, same exact thing that I was talking about in SPY. It looks like our range here was almost completely breakaway. We do have small, slight overlap at the lows and highs of last month's candle. So everything remains the same. Same thing with the overextension to the upside too. I want you to be cautious up here putting on any new longs. And with that, we'll continue. Again, weekly time frame, same exact thing. We'll go to the daily for some levels. So on the daily chart, you can see we're actually trading above the upper end of our resistance portion of the bull channel. Another reason to be that much more cautious here putting on any new longs. It's just really poor trade location. I want to hammer that home to you. It's all about trade location. If you're in a good spot, you can continue to hold long. If you're just trying to put something on that's brand new here, you're not really giving yourself that much chance for a move higher. We're looking at a pretty increased pullback risk here now that we're trading outside of the channel. Anyways, new all-time high, 293.85. Anything above, blue sky territories as always. To the downside though, first major support that we're going to be coming in contact with is going to be that 286.17. Below that, it looks like that there is another level which we can add in right about here. It looks like we had a few days it acted as resistance and then support there. That's at 282.50. Anything below that, we'll keep it down here at 278.50, and that should bring us to the low end of the support portion of the bull channel. And our last major market index, IWM Russell 2000 and the small caps, what you'll notice is that we still have a very bullish 5 months of continuous higher closes, but we're nowhere near taking out that all-time high. Even back here further, it's a little bit further back as well. So, still a very bullish chart, no doubt about that, but not nearly as bullish as the rest, the SPY and the Qs anyways. So right now, let's break it down and continue to the weeklies. So this past week, really just going sideways. We have 3 weeks of sideways consolidation after a nice bullish move in the upwards direction. So this to me is starting to form a weekly bull flag, if you will. We have something like this, in which case we're looking at a move higher. And I would say based on the weekly time frame and the ranges that we're working with here, I think 164, if the market can continue higher and IWM can break out higher, should be a longer term target. And dropping it down finally for the daily time frame analysis, it looks like, again, here's our consolidation. We're starting to poke back into this sort of range that we were stuck in back here. That was a little 5-day balance just about. It looks like we had some balance below, and it looks like we're starting to trade in this balance range again. So if we can consolidate sideways in here, things look good. We continue to make those higher lows, right? We're starting to stair step in the upwards direction. If we can maintain this little uptrend that we're starting to form, then I think, again, a breakout over that 157 or 158, we'll just round that up to the nice whole dollar there. Could be a retest of the 160 whole dollar. And of course, as we mentioned on the weekly time frame, put us up at 164.18 on any sort of larger breakout. To the downside though, let's say we do give up our little uptrend that's formed here. Also, one thing I'm noticing that I do want to point out, just because this is kind of cool stuff. I like how this works. If we draw in a trend line that looks something like this, we are starting to trade back above it now, so that's also bullish. But again, if we do start to break down, we have clear support below here, 153.37. Anything underneath that, we have a gap that remains unfilled, 151.79 down to 150.90. Anything underneath that, and we go back to the real breakout beginning point down here at 149.10. So if you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and also subscribe to the channel. That way you know every single time I drop a new video. So jumping right into Apple, Thinkorswim is reflecting the new split share price right around $125 per share. So we'll go ahead and mark in some new levels since they seem to have been wiped. Anything over our all-time high, of course, blue sky levels. To the downside, though, it looks like we are forming a key support right around 124.50s. Below that, we have a few gaps, which I'll just quickly mark off and change to yellow for the next week's video, but gap there. And then, of course, back from earnings and when the split announcement happened, back here, gaps and gaps. So we have that marked in as reference points. And it looks like we have also a key support, which was a breakout area from in the past at 116. Anything underneath that, and it looks like this was a key support as well here, right around 113.60s, I'd call it, just to split the difference there. So what we're looking at in terms of pattern, though, is a bull flag. We have something that's starting to form like this. So the anticipated move would, of course, be a continuation play over the all-time high for another leg up. However, due to the fact that, the stock split just happened, we're just going to have to play this one, again, a little bit of caution. As we mentioned in the S&P analysis, everything's going to get played with a little bit of caution here. I think that, the potential for, all the investors that caught this move here to just now sell their shares to any new investor that wants to be involved at the lower price could potentially cause the price to actually go lower, even though we have a bullish pattern setting up here on the chart. So something to keep in mind, and you have the levels mapped out for you. Moving on over to Netflix, very interesting day there on Wednesday. We were actually telling members of the Discord to not chase up around any of these levels, and obviously you would have gotten bailed out if you did chase, but you're building a bad habit and it's not sustainable. So although we did have a massive day, I personally did not participate in that, and if you did, congrats, but just, again, be aware of the bad habits that could potentially be forming if you chased it at any of these key resistances. Anyways, rant over. It does look like we're starting to form a bull flag here now on the daily time frame, where we're starting to consolidate and go sideways up, over the 50% retracement of that large body that we formed there on Wednesday. So that's bullish in and of itself. Anything above our 538.75, look for a retest of Wednesday's high, 548.72. Anything above, all-time high, of course. To the downside, though, if our double bottom breaks here at 521.60, we have levels mapped out. Previous resistance at 510.84, and then below our next key support should be 496.66. So Tesla, same exact thing as Apple. It looks like Thinkorswim is showing us the split price for the shares here, and we're going to be opening right around 442.68. So of course, all-time high will act as resistance up there. Just to map out some quick levels, we have a level here, it looks like, as support. Below, this looks like a breakout area, and of course, coming back down into our previous levels, looks like that's key. This is going to be a key support. And we'll just map out this set of lows as well, just so we're aware we have some levels to trade off of. And we'll update this thing as we continue to trade here on Tesla. But anything, of course, over the all-time high, blue sky territories. To the downside, though, if we pull back, and again, I think the same principle here applies with the whole split psychology and selling shares to new investors as Apple. I think we could see actually a move to the downside as, larger investors sell off their shares to lock in some gains. So look for support there at 426.23. Anything underneath that, and I guess we'll map out this one as well. It looks like we pulled back nicely and bounced off of this level at 393.90. I'd watch out for 400, the psychological support, as well before we get into the 393 level. And then lower, this is going to be a key one just because we have many data points there. That's at 369.85. So Alibaba has gone from a really ugly and non-tradable chart to something that's actually starting to look quite nice. So we have, just like in Apple, a bull flag starting to form, something that looks like that. And again, the anticipated move here is a continuation play higher. So we're watching for anything above our new all-time high here at that 292.50s. Looks like our key support for the flag is going to be here at 283.76. And below, of course, now we do have a new gap in the chart, which I'll flip to yellow for next week's video, but that fills anything underneath our 271.64 down to this level here, which is at 267.40. Again, based on the structure and the pattern that's playing out here, I would anticipate a move higher, and that's the likely scenario in terms of any breakout. Facebook, very similar to Netflix in terms of the absolutely massive range that we had there on Wednesday. Same thing applies, starting to form a bull flag. It seems like most of the things we're watching are forming this bull flag here, but no split. So I don't think anything funky should happen. I think the pattern should play out if we do get continuation over this little resistance trend line that we're starting to form to retest the all-time high. Anything above, as always, blue sky levels. To the downside, though, let's just map out some key supports. Of course, our bull flag support level there is going to be at 291.72, just about. Anything underneath a retest of this should be the key support going forward, just because it was the prominent previous all-time high here. That's at 278.97. I'd call it 279, just round that to the whole dollar there, just so we're not splitting hairs, if you will. So watch for that on any sort of longer-term pullbacks. Anything lower, and I would start to get concerned that we could potentially form a pattern that looks like this, which is a head and shoulders, right? We have shoulder 1, head, and then shoulder 2, could send us back into our support trend line. So that could be something that happens if we break down here and go lower than our previous all-time high. NVDA just keeps flagging on up, so you can tell we're just following this nice pattern. Bull flag forms, another one forms on top, and we just keep flagging up and up. So right now we're in which phase? Of course, hopefully you're able to recognize we're in the pull portion of the phase, and we should start to see some sideways consolidation or even a little bit of pullback. A retest of our breakout area here at 513.75 just about wouldn't be the worst thing in the world, as long as we maintained it as support and then bounced higher out of it, of course clearing that new all-time high. So we'll mark that in at 525.92. Anything above blue sky territories to the downside, we covered our 513.73 support. Lower than that, we have the consolidation low support. That's at 503.17, and from there you can tell there's a little bit of room to fall. So watch out if we do go lower than that. I do think the potential for a larger move to the downside if we give that level up could be in store, and we have it leveled down below at 472.65. So Microsoft, I told you guys to buy it at 200, and look where we sit now, 228.91, just about on the close there on Friday. So again, forming a bullish pattern here where the move is almost straight up, sort of due for a pullback. It looks like we have some upper wicks that are forming up here. We'll mark in the all-time high at 231.15, but just know that the wick of Friday should offer some resistance as well before we get all the way to the all-time high. So watch out for early rejection or any signs of weakness up there for a pullback if that's what does happen on Monday or early on in the week. It'd be ideal to see it consolidate sideways, go sideways here, maybe even pull back a little bit before making another leg up. Obviously, blue sky territories over our 231.15 level, but to the downside, again, very little structure, market structure in this area of the chart. Let's drop it to the 30 just so I can point out a few levels for you. So some things to be watching. Of course, it is starting to form actually a triangle pattern where the early trade in the week should be a watch for the break of something that looks like this. If we could get a click, there we go. That is the wedge that we're sort of consolidating in and trading within. If we break out higher, of course, we covered those levels to the downside. Just be aware of the horizontal levels that are inside of the triangle, right? So we have this support here at 226.58, and then a next one down below at 224.65, just about anything underneath. And this is our next support below at 221.67, and then here as well, of course, 219, we'll call it the whole dollar. All right, so not least and not last, we have Amazon here. Before we get into our 5 additional tickers for the week, it looks like we are establishing value above our all-time high quite nicely. Again, this is just another one of these bull flag patterns forming something that looks like this. Another breakout higher could put us up, anywhere, 35.50, 35.60, the higher end of the 500 range here on Amazon. So watch out for that on a breakout above our all-time highs. Of course, they're at 34.53, again, a double bottom, sort of coinciding with that high quite nicely, actually, there. So anything underneath are 33.80, 367. Look for a retest of the prior all-time high. That should act quite strongly at 33.43. Anything below prior breakout level should act as support as well. That's at 33.1404. And underneath that is the true breakout level where our ascending triangle essentially broke for the first time there. That's at 32.45.94. Round that up, 32.45.46. Excuse me. So moving into our new set of companies here, starting off on AMD as requested from the Discord. Again, feel free to join that link in the description of this video. Looks like we have all-time high resistance up here at 87.72, but we are starting to form what I would consider a bullish pennant. If we draw in a support trend line, that could look something like this, and we go like that. It looks like, of course, our lows are continuing to stair-step in the upwards direction, getting higher, signaling an uptrend. Breakout over here puts us in blue sky territories, but for supports below us, first key one that I'm noticing is going to be in here. Again, let me grab the right tool there. It looks like there at $83, the whole dollar, nice, perfect. And then this previous set of resistance in here turned into support when we bounced off of it there. That's at 78.88. Anything lower, and it looks like we could, of course, potentially check this one out at 76 whole dollar, and there is a gap underneath that to be filled. If we go lower than our 73 or 74, we'll call it the whole dollar, we could fill a gap down here to 69.66. So Boeing looks actually really choppy. It sort of had a key flush point or even a symmetrical triangle depending on how you drew it in. It looks like this is a key support here, right? We have a level, we'll actually adjust this further down a little bit. Right around our 168.20s, it looks like we bounce off of that level quite significantly every single time. So that is going to be a key flush point. If we go back and retest it, then I would imagine that a quick move down to retest this set of lows in here could be in store at 153.38. Anything above, though, let's just map out some key resistance. That certainly is going to be in play at 182.50s, I'd call it. Just round it down a little bit since our most recent rejection from that level is lower. Anything above, though, and it looks like we just have to sort of stair step higher. Next key level is going to be at 189.71, and then I would call this one out as the next key level based on some of these supports as well at 197.50. But for now, just consolidating sideways. There's no clear direction to be had, so until we get a move underneath our 168.21 or above our 182.67, I would just play some intraday ping pong back and forth or whatever setups continue to happen intraday. So DOCU is looking like it could potentially form a head and shoulders pattern here, rather, especially with this inverted hammer that's formed on Friday. Very have to be careful about that. If we get a pullback here, then watch out for the break of the neckline, and I'll just illustrate that here. Neckline would be any sort of break of that support trend line. You can see we've bounced off of it once, twice, forming higher lows. If that fails and we go lower, then the potential for much lower is there based on our head and shoulders pattern, right? Head and then shoulder 2, break of the neckline, boom, you go lower. In terms of supports that could be in store, before we get there, of course, this hammer is very interesting to me, as well as, sort of choppy resistance in the past as well. Of course, got to switch back to that tool. It's a bad habit. I got to get out of that. But for here, we have 201.50 is just about. I'd watch for that as key support if we go lower. Then this level here at 214.85, I'd call it. Anything underneath, again, look for that swing lower. If we bounce here and continue higher, of course, all-time high up at 229.83. Watch out for a rejection there. But first, having to battle back up through Friday's high at 223.65 just about. Of course, over the all-time high is blue sky territory. So I hope that was sort of helpful here. But again, watch out for the head and shoulders pattern. That's something that's sort of staring me in the face. So ROKU had a pretty impressive end of the week, and that's no surprise considering how tight the consolidation was happening right here, for many, many days prior to this big expansive move to the upside. So one nice day of consolidation here, and then a follow-through day the next day. Very, very nice plays there. If you caught it, congratulations. It looks like, just to map out some key levels, that is a key resistance there at 166.15. First, prominent all-time high, rejected just around that level, slightly higher next time around, and that's exactly where we stopped out on that first move, consolidated lower, and boom, had the breakout higher on Friday. It looks like anything over our 177.54 all-time high, of course, blue sky territories on any sort of pullbacks. Again, you're watching out for that 166.15 level, anything underneath that, and that wouldn't be ideal for the breakout here. However, let's just map out some key supports. That will be one, of course, the consolidation highs. I would even say this level in here should be a key level at 158.27, just because all the touches we have sort of in this area here of the chart, as well as the pullback low on that day of consolidation on Thursday. And finally, last but not least, we have ZM ending on a Z, nice and alphabetical there. But we are almost in blue sky territories here, so anything above our all-time highs, of course, we'll just map out a level that's just before it. You can tell we sort of topped out there on Wednesday, Thursday, and Friday. That's at 301.67. Of course, the all-time high is 303.58. If we go above any of those levels, look at blue sky territory levels. Of course, to the downside, though, we have key support forming here at 291 whole dollar. Anything below that, and our next set of key support is going to be in here, really. Yep, I like that level. That's at 275 the whole dollar. You can tell we had previous resistance. It was even, slightly in this area as well, but then very, very strong support where this most recent bounce sort of happened from. So anything underneath that and next levels below, if we just map out nice, quick, and dirty, this is going to be a key one for me, at least down at 242.50s. Again, looks like there's a lot of room to fall in here. I'm sure intraday levels will form. You might catch some support off of the mid range there. It looks like it was resistant in the past here as well. So watch out for that. We'll just map it out real quick. It looks like it'll be about 260 if we're just, playing nice round numbers. So watch out for that one as well. That's going to do it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, then feel free to let me know by leaving the video a thumbs up or a comment down below. Of course, if you like the 5 additional tickers we covered, you can let me know in the comments as well. If you want to be a part of choosing which 5 tickers could potentially be in the next video, then join the Discord server. That's how we take a vote on it. And without further ado, I wish you a green trading week.